everybody. Welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As we get started, let's do a quick systems check. If you would, type OK in the question/chat box if you're hearing me clearly and seeing my screen all right. Okay, looks like we're up and running fine. If anyone has any issues as we go along, feel free to let me know. As always, keep in mind that there's risk involved with each trade that you take. No one trade is guaranteed to bring profits, so you should manage risk in a way that makes sense for your risk tolerance, your balance size, etc. And also keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, real quick, before we take a look at some of the fundamental news today, for anyone who's brand new to things, what is fundamental analysis? Basically, it's looking at the news, whether it be economic announcements, like regular events that are scheduled on a calendar, or it could be headlines of things that pop up that are more extraordinary type of news events, all of which can affect the markets and different instruments in terms of the price movements on the charts. And so that's basically what fundamental analysis is trying to figure out which way is the wind blowing, so to speak, from the fundamental news, and then trading, hopefully with the wind at your back with whatever instrument you're trading on, whether you're buying on something or selling. Hopefully the economic news, the fundamental analysis is in your favor for the direction that you choose to trade. And that in the end can improve your winning percentages and your bottom line P&L. Now, from our main website, we can take a look at our different platform options. And in particular, I want to show you the AvaTrade Go mobile app. If you haven't downloaded it onto your mobile devices, you can trade on your MT4 and MT5 accounts using the AvaTrade Go mobile app. And what's nice about it is it also has all of the advanced features that we're about to look at in our web trader. So it has the same functionality as our web trader and allows you to trade on all of the MT4 and MT5 accounts. So if we log in from our main website in the upper right corner, we're in the web trader. And since it's a fundamental analysis webinar, we'll start with some fundamental analysis. We'll also probably take a look at some of the technicals as well, because we need to find entry points, exit points that make sense from a technical perspective once we decide fundamentally what we think might be happening. Now, this week is a pretty slow news week in terms of scheduled fundamental economic announcements. We do have some out of the US today that we'll take a look at. Tomorrow is again a holiday in the UK and a slower trading day in general as we head to the new year. And that was the case earlier this week as well with the Christmas holiday and Boxing Day, etc. So let's take a look what is happening today fundamentally. It might be a muted, I should say, trading day, meaning a little bit slower than usual, but certainly there will be some movements on the charts that you could try to take advantage of. Now, on the economic calendar, we can take a look in particular out of the US, some larger announcements that are coming today. And so if we look at some numbers coming out of the US, let's get on today's announcements. There we are, 28th. If we look at the announcements out of the US, so we had some out of Japan today that actually showed some data that was better than expected on retail sales. Also, industrial production dropped less than expected. It dropped, but it was less than expected. So overall, good news out of Japan, which could act to strengthen the Japanese yen a bit. So we'll take a look at some currency pairings that might relate to the yen. And also we see out of the US, we have some large announcements coming. So by large, I mean ranked as high importance, or at least medium level importance in the importance column, okay? And so let's start with the jobless claims. We see that the expected number is expected not to change much, 205,000 initial jobless claims last time. This time it's expected to be slightly higher than that, 207,000 initial jobless claims. And we can take a look at the past movements surrounding this particular announcement. So each of these is an event from the past when the initial jobless claims numbers came in. And we can see, if we look at all of the events, half the time after these numbers come in, the movement goes up, and half the time it goes down. But if we qualify that, and we can look at different currency pairings if we want, but we'll stick with Euro USD for now, and we'll stick with 4 hours after the event, at least initially. And let's qualify it then and say, well, what if it comes in above forecast? What then has happened in the past? And we can see then 75% of the time the movement drops if the initial jobless claims are above forecast, meaning more initial jobless claims than expected. And then if it comes in below forecast, the opposite. 71% of the time, then it goes up, the euro strengthening against the USD if the initial jobless claims have come in lower than expected. All right? And so the data shows you the direction that had you traded in that direction in the past, you would have been successful. So a lot of times, data-driven trading and data-driven traders will use this data to decide which way that you might want to trade after seeing how the data comes in. Okay, and it even shows you the range movement that's expected in the hours following. And we can look and say, okay, well, what about if I look at a different time period? So sure, after 4 hours, the average movement ended up 71% of the time with an average range movement of 47 pips or so. After 5 minutes, look, 71% were down. So you had an initial false move the majority of the time down with a range movement of about 10 pips in the first 5 minutes. And after 4 hours, 70% or so actually ended up. So it's not like after the data came in, it was too late to trade. It's not like in the first 5 minutes, the movement already moved this 47 pip range and you didn't have time to place a trade after seeing the data. In fact, you had plenty of time in the first 5 minutes to place a trade and actually get a better entry point in that first 5 minutes with downward movement that after 4 hours, it ended up. And that's when the numbers came in below forecast. If they came in above forecast, the opposite, right? 75% of the time it dropped after 4 hours. In the first 5 minutes, it dropped a lot less, 16.9 pip range, and a couple of them actually went up in that first 5 minutes. And then after 4 hours, the majority were down with a much larger range movement, 51 pips. Okay, so we can analyze each of these announcements that come out each week in advance, and you can have a trading plan for each announcement that you see a large statistical advantage could be gained based on how the data comes in on the current announcement. If there are any questions on any of this, I'm keeping an eye in the question chat box. You can go ahead and post questions or comments as we go along. Now, what else is coming in out of the U.S.? Pending home sales. All right, there's been a big focus on the home sale market, the housing sector in general in the U.S. because of the interest rates going up so much in the U.S. in particular, because they raised interest rates in the U.S. so strongly to try and bring down inflation. One sector of the economy that can be largely affected by high interest rates is the housing sector, because typically people don't have cash on hand to buy the entire value of the house. Usually they're relying on a large portion of the value of a house that's being bought by getting a home loan. And since interest rates went up so much, this affects in a large way people's ability to buy at different price levels because they're relying on home loans that have a much larger interest rate now. So their buying power is much less. They can't afford as large of a loan with much higher interest rates. And so that's the situation now with the housing sector. There's fears that there could be somewhat of a crash maybe in the US on the housing sector that then could pull down the rest of the economy. Not everyone feels that way, but there are some fears out there from some analysts. Now, let's take a look then, since there is a large focus on the housing sector. There's expected increase in home sales. Instead of the last numbers that came in, they dropped 1.5%. There's an expected increase now in home sales. If this number comes in below expectation or above expectation, we certainly could see an effect on the movement of US currency pairings. So we take a look at Euro USD and others. We could look, let's say GBP USD this time, 4 hours after the event. If these come in above forecast, meaning larger pending home sales than expected, the result has been 50-50 on the GBP USD. If they come in below forecast, the result has been 50-50 on the GBP USD. So then we say, okay, let's go back to the euro. Maybe there's a more predictable movement with the euro, and we see indeed there is smaller range movement with the euro USD compared to the GBP USD. So less volatility, but larger predictability. And this is where you can kind of hone in using this tool, not just on which announcements you want to trade on, but which currency pairings make the most sense. Because we go from 83% predictability with Euro USD to 50-50 with GBP USD. Okay, so it does make a difference when we look at the past in terms of predictability when we switch different currency pairings. So with Euro USD on this announcement, if it comes in below forecast, 83% of the time in the past, the euro is gained against the USD. Okay, so you can have a plan in place that if this comes in below forecast, you'll buy on the euro expecting the USD to weaken if indeed the numbers disappoint on the home sales. What if it comes in above forecast? The opposite, 2/3 of the time then the USD strengthens, pulling the euro down if the housing numbers come in better than expected, above forecast. And that kind of makes sense in my mind, that the USD would strengthen with better data than expected on home sales, and that it would weaken with lower than expected data on home sales. Okay, and so this is one that I prefer out of the two that we just looked at, because the directionality in my mind makes sense with the fundamental news. And there's great statistical advantage from the past in terms of predictability of direction. When we looked at the jobless claims data, there was good predictability in terms of percentage up or down based on how the numbers come in, but they were kind of the opposite. When jobless claims numbers showed good news for the US economy, meaning being lower than expected on jobless claims, the USD weakened, which kind of seems to be the opposite. And when the jobless claims numbers were higher than expected, which is bad news, the US dollar strengthened. And so the jobless claims numbers seem to be the opposite of what you might expect, but still showed good statistical advantage from the past based on how it comes in. But the pending home sales have that statistical advantage, but also kind of makes sense in my mind more. That when there was good news, the US dollar strengthened, and when there was bad news, it weakened. But you can choose to trade on both or kind of decide whether you want to trade on either, right? But that's where everyone's preference as an individual trader comes in. But certainly the data is there with this tool. So you can make an informed decision after seeing the numbers come in today. Do you want to buy or sell? And for what distance do you think it'll move based on the distances it moved with the past announcements for these particular announcements? Okay, let me pause for a moment and see if there are any questions, comments. Okay, I don't see any questions popping up, so I must have been pretty clear. And let's take a look then maybe at the market buzz as well. It's another fundamental news feature that we have. And we can take a look at any number of instruments, whether it's cryptos, currencies, commodities, indices, or stocks. And the larger the circle in this pictogram, the more it's trending online. It doesn't mean you can't take a look at ones that are trending less. You can find some great opportunities to trade on. Amazon is a smaller size than it typically is. Doesn't mean it wouldn't be a good opportunity potentially to trade on Netflix, etc. You know, we could take a look at something like Apple. I know there's been some recent news about their watch that, you know, for whatever reason was blocked in the U.S. and then there was an appeal, and it looks like Apple has gotten relief on their appeal. The Apple Watch Series 9 and Ultra 2 sales ban that was put in place is now lifted. It's put on hold, it says here, by the U.S. Appeals Court. So that could be potentially bullish news for Apple, the fact that, which is a product that's a major source of revenue for them each year, since they've launched the Apple Watch. The ban on the sales in the U.S. Has been lifted. So you could read about why in the article. Just by clicking like I did, it brings up the source of the news. And so this is a great feature to find information on things you might be interested in trading on. So, and from a different source, but same topic, Apple resumes sale of watches after appeals court lifts U.S. ban. Again, you can go right to the source of where that news came from. Very simple to find it and read through and see what you think about the news and what they're saying about it in the article. And you know, this could be enough for you to say, you know what? When the U.S. market opens, let me check out where Apple opens on the chart, what kind of trend I see, and maybe I'm interested in trading on it. And you can even do that pre-market right now and take a look and say, I see reason maybe to be interested in buying on Apple. And by the way, let me go back for a second before we look at the live chart. You know, when we look at any instrument in this tool, you're not only getting that fundamental news, but we'll go back to Apple as an example. We can also see what do the analysts at Trading Central think about the potential movement. And we see here the trend analysis. Besides the fundamental news articles, we have a technical analysis here that they believe the price could rise over 5%. Okay, and you can click on this and get the chart that shows you the support levels below, the resistance levels above where they're thinking that it could rise to, and that's basically where they suggest you might take profit. You have the breakdown of the indicators that were used and the important price levels for support and resistance. Okay, so those of you that are technical traders, that news is right here for you as well. And it's nice to see that the fundamental news was positive, and we said that maybe that's bullish for Apple, the fact that this ban was lifted. And then at the same time, the technical analysis is showing an expected rise as well. So now I start to put together my trading strategy where I say, okay, the fundamental news is on my side. The technical signal is on my side. And now maybe I wait for the market to open to see maybe it gaps up at open and shows bullishness at open. And maybe that's part of my checklist then to say, okay, now I'll buy on it. Okay. Everyone's checklist is different in terms of your strategy, but my point is, don't just rely on one tool. Don't just read the article and say, okay, then I buy. Each of these is a tool. The market buzz is a tool. The signal is a tool. Your technical analysis looking at the chart is a tool. And if you put then those together, you create a strategy with multiple tools. Okay? And so your rule might be that you want the signal to agree with you and the articles that you read to agree with you, and then the price movement on the live chart to be in your favor with an opportunistic entry point. And then if that's the case, maybe then in this example, you would buy on Apple. So, and by all means, if you wanted to sell on it, you could do that as well. I'm not here to tell you to buy on Apple, but from a strategy perspective, we might see a few things that then align to make you decide whether to buy or sell. And so I see here one reason already I might want to buy on Apple from a technical perspective. And what that is an uptrend that reached resistance here, and then broke through that resistance here and found support, and now has pulled back down to that support level, which was the old resistance. You see how the resistance, once it's broken, flips and becomes support. Okay, old resistance, new support. And you see it bouncing up slightly yesterday off of, or earlier in a few days back, bouncing off of this support level and holding, okay, through the holidays. And so as the US market comes open today, if we see that it holds above this support level and starts to trend up, combined with the positive article about Apple and the signal saying it's expected to rise over 5%, then maybe you say, I'll buy. And you put your stop loss maybe below this support level with your take profit maybe somewhere up where that signal said it might rise 5%, or maybe up towards this resistance level from last week, where we see it rose up to and then found resistance and dropped. So maybe your target is up this way, okay? Or higher for that matter if you were buying. So this is the way you can put together a strategy. Now, what if the market opens and it opens below this support level? It opens down here. Then maybe you start to question whether there's really positive momentum up, because why would it open low or below this support level if indeed it was going to rise? So if it did open lower, then you might have a strategy to put a pending order back above that support level, somewhere up here, that if it then broke back above, you would buy with a buy stop pending order, okay? So it all depends, how does it open? Whether you would act with a market move, in this case maybe to buy, or a pending order to wait for the movement to get to where you believe it's indicating an uptrend if you were looking to buy, okay? And obviously, if it opens below the support level and it looks like a downtrend, maybe you think about selling. But in my mind, that doesn't fit my strategy concept, because I want the fundamental news to align with the technical analysis. And in this case, the fundamental news and the signal both look like they're saying buy. So if this opens in a downtrend, then that's why I would sit out maybe selling and wait to see if the uptrend comes back with a pending order. Okay, or if it opens with an uptrend, then you just have to decide, is that entry point good for me, if indeed you were looking to buy, okay? So it depends on the open now is the last part of this strategy to align hopefully with that signal and the article, okay? Articles, I should say. All right, any questions on that idea and concept on putting together those multiple tools to create then a strategy to trade off of? Okay, I don't see any questions popping in. So what we've covered then are a couple different pathways you can go today to do some trading. Even though, like I said, the volume of trading is a bit lower during a holiday week like this, and heading into more holidays on Friday and through the weekend, but still there will be some opportunities there. And the largest announcements I see today are those US announcements, the initial jobless claims, the pending homes information. And so those you could have trading strategy around based on the past movements around those announcements, like I showed you on the economic calendar. And then you could also use the market buzz feature to find what's the latest news on different instruments. And I only showed you one example, right? Apple. Doesn't mean that that's the one you choose to trade on. You could, but you can use that market buzz feature to peruse through some articles of different instruments you might be interested in trading on, and see which of those have articles that then convince you that you have a strong opinion as whether to buy or sell on one of those instruments. And then you get into the technical analysis, see if there's a signal on it, etc., to go ahead and use a multi-pronged strategy to then enact trades on something you feel confident on. Yes, there's a question that popped in. Can I trade on my MT5 account? Yes, you can. Let me show you here. This tab up here allows me to switch between all of my accounts. So I can switch I'm on this one now, MT4 account. I can switch to my MT5 account very easily. Just click. And now I'm in my MetaTrader 5 account just as soon as it loads. And it's so simple because I don't have to log out of my MT4 app and log into my MT5 app, or log out of my MT4 platform and log into my MT5 platform. You can do that. We have the MetaTrader platforms and apps available, but the web trader is so much easier. I just switched to my MT4 account just like that, from my MT4 account to my MT5 account just like that. Now my MT5 account for my demo purposes is not funded, but my MT4 account is. So I tend to be in my MT4 account, but you can switch between any live accounts you have on MT4, MT5, and your demo accounts. As you can see, I have my demo accounts listed here as well. Okay, I can switch to my demo accounts. And by the way, we offer Ava options trading. If you're into options trading, you can go to your My Account section, and I can switch to our Ava options platform as well. Okay, you see here I have an Ava options account. And so if I click on web trading for Ava options, it'll take me to my Ava options account for options trading. It's a different type of trading, options trading, but there are tutorials on this platform. There are, and it's just taking a moment to log me in. It's remembering my login information because I've already logged in through this pathway before. And so as soon as it loads, you'll see our Ava options platform. And it's with one click to go from MT4, MT5, Ava options, web trader platform, etc. So we've got a lot more to offer than just what you see in my web trader webinars. If you're into other types of trading, take a look. This platform has tutorials on how to do options trading. It has templates, etc. And you can do your CFD trading from here as well. It's a really nice platform option to use. Okay. And so I think this is a good place to stop. Take a look at some of the movements today. I think particularly those that you feel could be affected by those US announcements, but also the market buzz. Look at the latest news on different instruments you're interested in trading on. I believe you could find maybe some predictable movements today because there isn't a lot of high volatility with the lower volume of trading typically. And maybe the predictability is there for you. Like you saw the difference between the Euro USD pairing and the GBP USD pairing. The predictability was much higher on the less volatile instrument. In general, that could be the case today for a lot of instruments, since the volume of trading and volatility could be a bit lower. Okay. All right, everybody. Thank you for joining. Happy holidays to you all, and I wish you all a nice new year as it comes in, and a good 2024 as we head into it. All right, everybody. Bye for now.